Hi, everyone. It's Lee Goldstein, the trading director from 10 Minute Trades. I want to welcome you to episode 29 of our 10 Minute Trades podcast. And it's the weekly wrap up from June 6th through June 10th. We had a very nice week of trading this week. So let's get started. I like to group the opening trades that we have rather than going through every single one. We've yet to be stopped out on a gold open or an oil open. I was trying to think. I couldn't think of what our other open was. Gold open and oil opens. They've really been working well. We've tested now a new setup because we're boosting our account, as we've spoken about previously, to an amount that allows us to trade oil and gas, the regular energy reports on a regular basis. And we're also going to trade the oil and gold opens using full size contracts. And we've been testing this week a new setup to see if we can mitigate some risk and trade one contract on these opens using some special features in our software that allow us to move the stop without taking you out of a trade. So it's a very interesting method. You definitely want to get into the trade room and learn how to do this. It's a very powerful feature of our software. And of course, we are very excited about a new version of the software coming very soon. We'll probably have an extravaganza July 4th event showing off the new version of the software. But this week, the opens, gold and oil, were all positive. We didn't have a single stop out. And I can't remember the last time we were stopped out. Those setups have been working great. The NQ is a different story. It's much harder to trade the NQ. And while we've had, a fair amount of good NQ trades, we're probably going to put the NQ opens on hiatus because we want to trade events where members and us have the best opportunities to make profits. And that's always the way we do things. So that's what we're going to continue to do. So probably this next couple of weeks, we're going to put the NQ opens on hiatus and we don't even need to replace it with something else because there are plenty of events every week in the trade room. So we're not losing anything. So as I said, the opens were great this week. Our first official news-oriented trade is an event that we've traded for years, but it's not been very active over the past couple of years, the Australia rate statement. I've been watching it for months. It's been moving really well. I got up at 12 midnight on Monday and into Tuesday morning. I begged people to come into the trade room and trade it with me. If I get up at midnight to trade a report, I'm not simulating it. I'm trading real money and I'm not trading one contract. And we had an awesome Australia trade. It could definitely qualify as the trade of the week. It was fantastic. Then we had the API report Tuesday afternoon at 4, and the API report's been just acting really strangely. We lost money on our initial trade. I lost $20 because it got us into the trade before the news was released. That was clear. I got right out of the trade, put the orders right back on the chart, and then we got in again in the correct direction, I might add. There was a surprising build in inventories, but it really just didn't move the market. We got out with 6 ticks. So all in all, we had a 4 tick profit on the API report. It's been a strange report. 2 weeks ago, it moved like 50 ticks. We couldn't even get filled. It was such a fast move. And then this week, if we had 8 ticks of movement, that would have been a lot. But I still love that report. And then Wednesday, we had crude oil inventories and the 10-year bond auction. We have a new setup on the bond auctions. We're entering a little bit later, and we made money on the bond auction. And the crude oil reports are just trading superlatively, if that's a word. They're really trading great. So anybody who took the crude oil report using our DMM made money on Wednesday. So that covered Wednesday. Thursday, we had our only losing trade, the ECB rate announcement. It was just unfortunate. Maybe the bracket was a little bit too small. Maybe I shouldn't have had two orders on the chart. One of our members, actually Chantal, who works for us and tests for us, decided it wasn't wise to go long, and she just got in short and had a very nice trade. And that was a really smart way to do it. I didn't see that as necessary in this particular report. Sometimes you do have a report that even though you've got orders on both sides of the price, you might want to move one order out of the way if you're certain that your analysis is correct about what you expect in a move. Normally, we don't do that a lot in an event or in a news-based trade. But the ECB was a loser. Natural gas was a big winner again. If you traded the DMM, if you traded the daily report, natural gas was a great acting trade. And then the 30-year bond auction, we were able to get out with one tick. Had I been patient in that trade, I might have been able to get 4 or 5 ticks, which would have been very nice. But our new setup looks like it's going to work because putting the orders on later means that one of the biggest problems of the bond auctions lately, because they don't move very much, if your bracket is too small and you get filled in the wrong direction, there's no way to recover. So putting the orders on later looks like a way to get a better fill on those reports. And our alternative gold setup worked on both the 30-year and the 10-year auction. So we're going to look at that more seriously also as maybe a good additional trade within a trade. Okay, and then on Friday morning, we had the big trade. This week's biggest trade, and maybe the month's biggest trade because the whole market is looking at it. CPI was a nice winning trade. Most folks that traded it with us in the trade room had a profitable trade and made money. The Canadian employment report, that also, had you had a setup for that, would have been a winning trade. I avoided to pass on the Canadian employment report because the testing has really been mediocre at best, especially when that report trades by itself. In other words, most of the time that Canadian jobs report trades with the U.S. non-farm payroll jobs report. Today it traded alone, and our testing has shown when it trades by itself, it doesn't do very well. So I wasn't even interested in trading it today. It did look like it had a pretty good move though, and it would have been a profitable report. So that's our week. June 6th to June 10th, we had a very good trading week this week. I hope you enjoyed these videos as much as I enjoy making them, and I'll see everybody next week in the trade room. So have a great weekend. Take care, everyone.